graphics? Don't worry, because they've got you covered there too. You could find single graphics such as alerts, banners, panels, and logos as well. And one of the best parts about most of these overlays is that they are completely modular. So if you and your friends all pick up
simple. Someone who wants to get their foot in the door. Someone who's thinking, I've been learning iOS as a side gig for a while. I've been another job entirely, evenings, weekends, practicing my Swift, reading, learning, watching, whatever it is. What's your advice for helping them get their first foot in the door, get their first entry-level role?
That's a very good question. So whenever you're doing something new that you don't have any form of record of doing, right? Like when you've been an iOS developer for a while, or if you've been a writer or a lawyer or whatever profession it is for a while, then you have like a history of doing it, which makes it easier to get a new job. So it's that kind of catch-22 situation of, you want to get the experience and you need the experience to get a job, but how can you get the experience without getting the job first, right? So it's a kind of a tricky situation. So I think in this kind of situation, you really need to find other ways to kind of prove your skills, whether that is hobby projects that you've been building yourself, whether it's courses you've been taking, whether it's things you might have done with your friends or something like this, or just like general interest in your field. But I think it's very important to like emphasize that thing that you're trying to do in the beginning, like getting your very first job in whatever kind of field it is, it's always going to be the most difficult. And it's the same thing when you're moving. Like, for example, if I've been an iOS developer, I've been doing Mac development, now I'm like a writing, podcasting, and still doing app development. But let's say I wanted to go into machine learning or something. I would have to prove myself again, Like, I can't just like walk over to a machine learning job and say, well, I've got a lot of experience doing iOS development, you should just hire me, right? I would again need to prove like, oh, I've been doing machine learning in my spare time, I've been doing this and this hobby project. So I think it's always important to have that mindset and to, if you're interested in something and if you want to get a job in that field, to as early as possible to start kind of building up those that kind of resume material, whatever it might be.
So some sort of markers you can say, at this point, this time, this happened. Some sort of, it went on GitHub or went to the App Store or something, a clear milestone you can say, here's a record of my accomplishments over time.
Exactly. Yeah, you want something to kind of back up your argument, right? Because, obviously being passionate and being a nice person and advocating for yourself and being able to kind of sell yourself, as it's called, right? To be able to kind of pitch your skills and to convince someone that you're the right person for the job. Like, that's important too, but that only takes you so far. You also need to be able to back that up with like real tangible things, whether that is projects or courses or whatever it might be. But I think overall, whatever it might be that you're trying to do, whether it's iOS development or web development or whatever, I think the thing that always speaks the loudest is always real projects, And again, it doesn't mean that you create this super hugely successful commercial project. That's not what I'm talking about here. I'm talking about things that people can see and use and check out, whether that is an open source project, whether it's an app on the App Store, whether it's just something you threw together just as a prototype or something. It doesn't really matter. It's just something that they can look at that kind of shows that you know what you're talking about.
Right. And it's a chance for folks to prove their chops, not only in, I've read the tutorial, but I've applied what I learned to this thing. And I always tell folks, you can go ahead and build a very fancy app if you want to, but often just showing you've mastered the fundamentals. I know what navigation controllers look like. I know what table view controllers work like. Getting those fundamental UI kit controls looking and working great in an app with tests, with documentation, whatever. It shows you've mastered these fundamentals in practice. You've heard the theory
exactly
and applied it. And if you want to go on and do fancy pants 3D effects, you can do. But so much of our job really is get this table view faster, get this navigation thing looking nicer, do this animation better. It's sticking to the basics and really honing and showing those.
Exactly. And also, like when you're talking about like getting a job and going for interviews and things like that, a lot of the tests that a lot of companies will throw at you, whether that is live coding tests or take-home projects or quizzes and stuff like that, like they are all kind of based on things that you will memorize and learn kind of as you go and as you do things repeatedly. And, you can have your own opinion about whether that is the right way to hire or not. But the fact is that a lot of companies out there are going to throw some of those challenges at you, especially if you're a beginner and you don't really have that those years of experience to kind of back things up. Like repeatedly doing simpler projects, like you say, like implementing table views and doing the fundamentals can really help you really just like solidify that knowledge and solidify the answers to those questions that you might be asked.
Well, you mentioned memorization, and this is a topic that people ask a lot about because they imagine that senior developers have somehow crammed all of Apple's documentation into our heads. It's all
right. Just upload it. Just connect the plug. Right.
Yeah. Half my brain is no overview available right now. But yeah.
Right.
But and that isn't true. Surely we memorize some things, memorize techniques or some algorithms perhaps, but it's just too big to memorize all of it, or even vast swathes of it.
That's correct. Yeah. And I think like when we're talking about memorization, I'm not so much talking about like remember exactly, like be able to type out all of UI table view or all of Swift UI, like, letter by letter, all of the APIs. That's not really what I'm talking about here. And I don't think that's typically what companies look for either. They're more looking for like, the practices, the conventions. Like when someone asks you, can you implement a table view with a delegate and a data source, you kind of know what that means, or can you build this particular view or use MVVM or whatever pattern, they might be looking for. Those are the kind of skills and the kind of memorization I'm referring to here, and I think that's the important thing to practice, not necessarily like knowing all of strings, all APIs like by heart.
That'd be so hard to do. I
remember seeing, I don't think I could do that. So
no, I remember seeing I think Javier Soto saying that when he does interviews, he does string-based interviews, and folks will often solve them in Python rather than Swift. Because when you're nervous already, you're sitting there, you want to get this job, you've practiced very hard for it, you're a bit jittery, and then they say, hey, do this strings thing, you're like, oh, okay, Python. Something that is easier to sort of guess your way through sometimes. And it's certainly the case that in code we have lots of ways of reusing code. We can think about protocols or generics, whatever, and we've got these ideas for reusing code, and we also have ways of reusing ideas. We call them design patterns. We say, hey, I want to use the template pattern here, or I want to use protocols or delegation, like you said, and everyone goes, aha, yeah, I know what that means, and we can then apply that specifically to here. So the concepts, we don't necessarily know the exact details, so that makes more sense.
Thinking of getting into web development or app development? Are you trying to figure out where to start and can decide which way to go? If so, you should keep watching. This video is for you. Hi there. If you're new here, let me introduce myself. My name is Akram and I'm a web developer based in Hamburg, Germany. In today's video, we will compare web and app development based on 5 factors. This will help you decide which career path is best for you. So let's dig in. Web development and app development are similar in many ways. Both require good design skills to create visually appealing and user-friendly products. Both also involve working with clients, testing and debugging to ensure that the final product is functional and free of errors. However, there are plenty of differences that make web development and app development entirely separate careers. After finishing my computer science studies, there were 2 career paths that I was considering: web development and mobile app development. I decided to go with web development. And now I am a full-stack web developer with more than 10 years of experience. So today I like to go into more details about the differences between web development and app development and how I made the decision. I will compare the 2 fields based on 5 elements: skills, learning curve, job market demand, job satisfaction, and salary. Let's start with the skills. In terms of soft skills, web development and app development are similar. For instance, creativity is key to developing applications and websites that stand out in a crowded market. Good communication is also essential for developers to work effectively with clients. Other skills, such as problem solving, attention to detail, and time management, are all important for the successful career. On the other hand, hard skills make all the difference between the 2 paths. When creating mobile applications, different tools are required depending on the platform that you are targeting. For example, for Android, you need to learn JavaScript or Kotlin. And for iOS, learning Swift is your best bet. Now, if you want something that works with both of these platforms, you can learn to use tools like React Native or Flutter. This can help you to develop cross-platform mobile apps that works on both iOS and Android. Web development, however, requires a different set of skills. It depends on whether you would like to become a front-end, back-end, or full-stack developer. The most common languages for back-end are PHP, Python, Java, and Ruby, while for front-end, those are HTML, CSS, and JavaScript. I have made a video that goes into more detail about front-end and back-end. Check it out if you're interested. Next up, we have learning curve. Web development is generally considered more accessible for beginners. You can start with the basics like HTML, CSS, and JavaScript. Besides, there are many different types of websites that you can build, so you can start with simpler projects and then gradually work your way up to more complex ones. And not to forget that making websites requires almost identical skills and technicalities for every hardware system, unlike app development, where you need to acquire different skills for each platform. There are also other things that make mobile apps development more challenging. It has different design considerations than websites, such as screen size, touch gestures, and user interface patterns. Plus, mobile app developers need to be mindful of performance details such as battery life, app size, and memory usage. If you decide to go with app development, keep in mind that you need to be familiar with these design principles, which may add a lot to your learning journey. Let's move on to our next point. Number 3, job market demand. According to the United States Bureau of Labor Statistics, there will be 17,900 web development job opening every year until 2030. E-commerce and online businesses are popular in the market, which increased the demand for web developers. I had my online business once. A significant part of the process involved me developing and maintaining the website. If I didn't have those skills, I would have had to hire someone for it. Almost all businesses now need an online portal and to make their products easier to reach. This means that even at beginner level, securing a job as a web developer can be easy. The job outlook for mobile app development is even better. It is expected to grow at a rate of 22%. That's the equivalent of 189,000 jobs becoming available each year. It is no surprise given the rapid growth of technology and especially smartphones. Overall, I think that it's safe to say that now is a great time to start a career in either web development or mobile app development. The demand is growing in both fields, and getting a job is relatively easy. Our fourth factor is job satisfaction. PayScale conducted on a survey and found that mobile apps developers are pretty happy with their jobs, giving it an average score of 4.1 out of 5, which is around 82% of satisfaction. A similar survey among web developers found an average job satisfaction score of 3.9 out of 5, or about 78%. Many developers reported that creating apps and websites that so many people will use makes them feel that they are making a difference and that their work matters. One of the reasons that personally makes me love what I do is my flexible schedule. Working remotely and being in charge of my own schedule is one of the biggest perks of my job. Another main reasons why both web and app developers have a high job satisfaction is that you can always make a decent salary, which brings us to our last point. Lastly, we have salary. The average annual salary for both developers in the United States range between $100,000 and $115,000. Mobile apps developer earn a slightly higher wage with an average of over $120,000 per year. Aside from salaries, making money through app development is often easier because app stores offer developers a platform to sell their apps, also in-app purchases, or charge a subscription fee to access premium content. It is important to keep in mind that your earnings will be greatly impacted by your location and your company size and the level of expertise. So, why did I choose web development over mobile development? Well, the answer is actually simple. I had done several web development projects in college, so continuing with it was simpler. It was easier for me to get my first part-time job as a web developer, as I already had some experience in the field. Web development was peaking at the time, while smartphone and app development was barely in a thing. It was the more rational decision to pursue a career in web development. App development was a brand new concept and the future was unclear. Would I have chosen a different path had I known what I know now? Maybe, but do I regret going into web development? Definitely not. I have come a long way and I have an exciting journey so far. New career paths and options might become available. We'll see what the future holds. That's it for today. Thanks for watching. I hope that this video helped you better explore your options and decide which career path is the right for you. If you enjoyed this video, don't forget to hit the like button and subscribe for more content in the future. I see you in the next one. Bye.
Is there a difference between a software engineer and a web developer? Well, in today's video, I'm going to tell you the difference between these two titles with my experience as a software engineer for the past 4 years. So without further ado, let's get right into the video. Now, when I first started my career as a software engineer, I was always baffled by the job descriptions between software engineers and web developers. And the reason for that was because they were really inconsistent. You had some web development positions that had things like data engineering and CI/CD, as well as...
Have you been thinking of getting into web development or app development? Are you trying to figure out
So today I made a little over $1,600 day trading. Let me break down exactly what that strategy is. I'm going to break down how I read the market, what patterns I'm looking for, how I enter into the market, and how I manage the trade once I'm in it. So after this video, you will be able to know my exact strategy and be able to know how to execute it yourself. So every trading day, I start with looking for the key areas of support and a resistance. And so what that is looking at a larger time frame chart than what I trade and just looking to the left side of the chart. With the market currently trading down here, what I want to be looking for is, because we're in a downtrend, I want to look for a key support zone to see potentially where the market's going to bounce. Market's bounced here multiple times. If the market comes down here again, there's pretty clear support level down there. So after identifying the key areas to look out for, I like to jump into a smaller time frame chart and just wait for the market to come to those levels, because when it comes to trading, you don't want to be reactionary and trying to fit to what the market is doing. You want the market to fit to your plan. That's the best way I've found to become profitable. And so let me walk you through a few key steps that I look for when looking for these reversals. Now, I really only look for reversals and do it based on looking at a 15-minute chart for the levels and a 1-minute chart for actually trading. And so what I actually trade is the S&P 500 futures, and they give you about 450 times leverage, which allows you to start with a really small account and get a lot of movement potentially. And then I just read the candlesticks, and you can really read any market you want. And so if you want to trade on a different time frame, different market, you really can. So the first thing is getting to this support level. The second is making sure that the downtrend into this level is broken and it's lost steam. And so if you just kind of look at this in general, you can see that the market's kind of trending down here, trending down, and then all of a sudden it's just kind of starting to go sideways. And so that's pretty clear that it's starting to lose steam. Now, the trend could start to continue lower and break this support level, or it could just kind of go sideways, or it could, start going up. And so we want to try and identify when it's going to start going up, and so we can jump in and capture that move. And so the key things that I found that really help identifying that is, well, one, what we have in this trade is that the market is almost making what I like to call exhaustive moves. And so what that looks like is, you can see it's making attempts to push lower twice here, and they're starting to get rejected. And so it made an attempt to go lower here and it got rejected. And then, the market kind of just chopped around. And so that just shows you indecision. And then the market again does this a second time, where it makes an attempt to keep going lower, and it's attempting to push that downtrend lower and start the trend again. And so once I see this exhaustive move, I want to see the market lose that momentum, because if it loses that momentum, it's likely to shift higher. And I like to think about my strategy as it's a domino effect. And so if I see a smaller downtrend like this, it start to go sideways. Well, if that shifts, if we think about it, there's the larger version of that as well, where there's a little downtrend here, sideways. And if this breaks, it can make a really big shift higher. And so the thought is, if this little guy shows that as well, it can trigger this big one to go higher. And so that's how I like to jump in. I look at the big picture. The big picture is the most important, but to get kind of a super accurate entry, this is how I do it. And so the final thing here is seeing that the market makes a head and shoulders pattern. Really just looking at these swing lows is seeing that as the market, moves in this downtrend, is the swings get lower and lower in a downtrend. And then to go into an uptrend, the swings generally start to get higher and higher. And so if this theoretically is going to start into
into an uptrend, the swing lows will get higher and higher. And so that's what I'm kind of seeing right here. And so my thought is, okay, this is a big red candlestick that shows a lot of momentum lower, but it's immediately rejected by this big green candlestick. And so I think that's a good confirmation that the market is likely to potentially start to reverse. And so what I do is I take actually indicator I've made that just tells me how many contracts I need to trade to hit a certain risk. And so I like to, at the moment, I'm risking about 350 per trade. And so what that does is this just calculates exactly how many contracts I need to trade. And so this says I need to put in 32 contracts to risk $350 if my stop loss is right where this red line is. And so then it also shows you where 1 times, 2 times, or 3 times my risk is. So, you know, up here, 3 times 350, you know, so that's about $1,050 in profit if I'm right and the market goes all the way up here. And so there I jumped into the trade. I actually filled 28 contracts because I didn't get as good of a price I wanted. And that's totally okay. What I've done in the past is I've tried to, you know, get a better price with a limit order because, you know, you think, well, if I get down here, you know, up here is like 5 times my risk reward or 6 times, or it doesn't have to move as far to hit 3 times. And that's totally true, but you don't know what the market's going to do after your signal shows up. You know, it could just skyrocket right away. And so what I found the best thing to do is just get in once you see the signal. You can't always get the best price, you know? And so you have to just let things play out and go from there. Now, to just kind of show you how this trade went briefly is I like to actually manage my trade. And you can see I'm kind of moving my stop loss. I had it here. Now I moved it to break even because the market's kind of all over the place. And my thought is, okay, it's starting to show that momentum. And if it goes in my favor, great. But if it comes back down, the market's been really choppy overall. And so I kind of just want to get out of the trade at that point if it goes against me. But once, you know, we kind of get going here, it works out really nicely in my favor. And so once I hit about 3 times my risk, I switch to a very tight trailing stop loss. And so here we're about, I don't know, 4 times my risk, 5 times my risk we're pushing. And so I just go to the previous candlestick because the market can move really fast in your favor like you're seeing, and watching the number change is very, very emotional. And so I jump out quickly if it's moved up quickly in my favor, because as you can see right here, it's come back very quickly. The market likes to have these rubber band moves, and so they're awesome if you can get in them, catching it, but you have to get out quickly if it's going to reverse back down on you. Now, there are a few key important things to execute this strategy consistently every time. There's a lot of ways that you can have false signals and not as strong of trades show up. So let me show you a couple things to push you in the right direction of finding the better setup. So the market opens up at 6:30 my time, and you can see that it kind of just rocketed up. And I've already drawn my support and resistance levels. And so all I'm doing is, you know, I'm waiting for the market to get to those levels. And so here the market shoots up pretty quickly, making that exhaustive move. And so with those exhaustive moves, another thing is it's likely that if that exhaustive move happens and this market goes in a sideways, it's likely to fail and give that move back up. And so how you identify those exhaustive moves again is just looking for these really massive bars. These 3 big candlesticks right here show that the market just moved really fast in one direction, kind of right at the open. And another thing that I've actually noticed, the market around 7 o'clock sometimes likes to reverse. So what I do every day is I kind of let the market do its thing for about 30 minutes, see if it's come to a level like this, it's made an exhaustive move, and then I go through my checklist. And my checklist is looking for that support level, making sure that uptrend is broken. And so right here, I have a pretty clear trend line, and the market's pretty clearly broken that at this point, kind of with these candlesticks. If you're unsure, it's not broken. It should be really, really obvious that it's broken. And then 3 in the checklist is actually waiting for the market to make that kind of head and shoulders pattern. And so what we have is here, just looking at the swings, this will be in the reverse because this is betting that the market's going to go down. This is shorting the market. Is if the market makes a lower high here, that's a confirmation of that head and shoulders pattern, because on the way up, you know, it's making higher highs, and then if it switches, it starts making a lower high here. And so that's what I want to look for here. And so that's what I'm just kind of waiting for as the market kind of plays out here. I'll zoom forwards a little bit. And so what I'm looking for to confirm that is just a big red candlestick showing a rejection of that move up. And so here it's made kind of that micro pattern, that move up, and then it's making a massive reversal candlestick. And so I like to wait until the candlestick closes or gets really close to closing, and then I use that risk reward indicator to show me, okay, I need to sell or bet that the market's going to go down with 24 contracts. And then I just put my stop above this high, because my thought is that, okay, well, if the market's going to start making swings lower here, well, it's not going to break above this high. And so if it does, if it actually comes down here and punches higher, well, then it might actually continue this overall uptrend, and my overall bias or just read of the market was slightly off. And that's totally okay. Sometimes, you know, trades don't work out, and that's where the risk reward comes into play of risking, you know, 1 or 350 here to make a potential of, you know, about $1,000 down here. And I manage my trades fluidly, so I can get a lot more than that, but on average, that's kind of what I go for. And so a big thing, what I have actually struggled with that really affects my trading, and it's taken me a while to get better at, and I'm still getting better at, is waiting for your idea in your trade to play out. And so what I do a lot of the time is I'll jump in a trade here, and I'm focused on, okay, I'm up, you know, $300, $400, and I'm always nervous in a trade that it's going to come back and turn out to be a loser. And, you know, right now it's looking great, but because my stop loss is up here, well, the market could come back here and knock me out, and I end up losing money on the day. And so that's something that's always in my mind as I'm trading. And so my thought is, okay, I want to move to break even as soon as possible. And so what I've done in the past is move to break even too quickly, have the market chop me out, you know, hit my stop loss, and then I'm not in the trade anymore, and the market ends up going way lower, and I, you know, I miss out on the swing lower down here and miss out on that profit, right? And so what I've learned is to wait until the idea has time to play out. And so that's kind of hard concept. And so for me with this trade, my thought is I need to wait to see it give back most of this move up, because my thought is, okay, it's gonna at least give this move back up here, and you know, it might find support down here, because you can see I do have a support zone drawn down here. And so if it comes down here somewhere and bounces all the way back up, well, I don't want to let it move that far on me, right? And so that's, I'll move down to break even or move down further if something like that makes sense. But you can't move down too early, because the market can totally have a swing back here and still be in that downtrend. And so you have to let things play out. And so here, once it's kind of started to make this, you know, it had a little chop here, attempt to go lower, my thinking was, okay, it's gone about 2 times in my favor. You know, I'm up $600. That's about 2 times my risk. I'm going to move to break even, because if it reverses here, well, I want to get out of the trade, because I think then that's something's off, something's changing. And, you know, I could be wrong. It could just come back right up here and then puke lower, and I'd pull my hair out. But to show you what happened is why that's important, because look, the market went all the way up to the highs here. It would have knocked me out at an actual loss, and the market ended up just going into kind of a sideways action here. And that's not what you want to be trading. You want to be trading clean moves in the market. You don't, when the market starts to just go into this garbage right here, just call it for the day, get out, and be done trading. Learning this strategy has really taken my trading to the next level. If you want to take a deeper dive into the nuts and bolts of this strategy and what I focus on, more examples, and how this strategy works, check out this video right here. I made over $9,400 in the last 30 days trading less than 90 minutes a day, 4 days a week. Let me show you how I found, entered, and managed every trade I took this month, so you can see what it's exactly like trading this strategy and how you can execute it yourself. So to show you these are real returns, here's my live NinjaTrader account. We go to performance this month. We're at the end of the month. You can see my gross realized P&L is a little over $9,400. And I took one loss. It was around $650. That's generally about how much I risk per trade. And my wins are generally 2 to 4 times my risk. And so over the month, that added up to be a little over $9,400. And then down here, you can see here's all the trades I took this month. that we're going to go over in this video. Every trade I took this month is going to have something unique about it that is important to executing this strategy. I will go over my simple trade entry checklist, but trading isn't that simple. There are nuances that you can only learn by watching how this sets up on multiple different trades. What you'll notice over all these trades is they're all pretty much the exact same setup, because what I found is to be successful at trading, you have to make your strategy almost as simple and consistent as possible. Having multiple strategies and multiple patterns just didn't work for me. And so trading one specific strategy made it way more easy for me to be successful, because you're able to master one thing. What we're looking at is oil futures. You can trade this strategy on really any market and time frame, but this is what I personally trade. And so the first thing I do when I come into trading is, we're gonna go over our first trade here. It's November 1st. This is the first trade I took this month. All I did was I first looked at the 15-minute chart when I opened it. So what I do is I just like to look at a larger time frame to find support and resistance levels. Pretty much all I saw was, okay, there's kind of a support zone down here, and there's a pretty clear resistance zone up here as well. You know, the market's kind of come up here, hit this a couple times, did a pretty big sell-off. I think that this sell-off right here shows good momentum and selling pressure from this level up here. And so that's why I wanted to watch it when the market came and touched it again. What I wanted to look for is this level coming into today's trade. And this is my zone I drew. And so what we're watching is the recording of me taking this trade. And then once it gets to these levels, I look for essentially a checklist of things to show up to get in on a trade. And that first thing is looking for that really major key support or resistance level. And then of course, we just want to try and capture the swing lower. And kind of just to preview, you can see the market sold off really nicely off of that level. So let me walk you through how I actually enter and capture some of that move. And so how I did that was I kind of just saw, okay, well, it looks like there is kind of a trend line right here. You can see it kind of started here. It broke it a tiny bit right here. Breaking the trend line by a couple candles is not a big deal. And then you can see it bounced here, covered up a little bit by my trade. And then it tried to bounce here by a couple candlesticks. You can see a couple wicks. But then it eventually broke that. And so for me, that's a solid reasoning to think that, okay, it's reversed, it's broken. Another big thing is looking for a head and shoulders pattern, basically. The market puts a head and shoulders here. It essentially makes in its uptrend, you know, it's making higher highs. It makes an extreme high here, and then it makes a lower high here. And you can see right here, the market does break out of our resistance zone right here a little bit, but that's okay. Sometimes it can break up a little bit, but then it can still realize, okay, now it's gonna go reverse off of that level. And then so the final kind of thing to jump in, just kind of quickly going through this first trade, I want to see a rejection candlestick or some kind of engulfing candlestick. And so that's what happens right here. If I actually just zoom back in the recording briefly, this is what I looked to get in on. The market kind of, how I see it is the market's making an attempt to keep pushing higher here. And I see it as, okay, the trend's going to continue higher. It's probably going to push up right here. And so what this candlestick, these kind of two candlesticks show is, well, the market's making that attempt, and you know what? It's given up. It's not happening. And so from there, you can see I pretty much just jump right in on trade once that candle finishes forming. And then I put my stop above this swing right here. And so that's kind of what I expect to see if, you know, if the market kind of breaks this. I just like to get out and kind of move on. And you can see here, kind of zooming forwards again, is the market kind of almost came up here against me. I was kind of down a bunch of money. But when you're trading, you have to just stick with your plan and let things play out. Because, you know, if I got scared based on this candlestick right here, and I just closed up trying to save a couple $100, and you know, I would have missed out on this massive swing in my favor. And so this kind of really starts getting going in my favor. I'm looking at, okay, there's kind of a tight downtrend, there's a potential support level, and then I jump into a 1-minute chart, and you can see there's a really tight downtrend. And so I like to manage my trades. If they get really going in your favor really rapidly like this, I like to jump out, because the idea is they can have a really fast reversal move as well. And so I kind of trail up my stop based on breaking this downwards trend. And that is a really good way to capture the profits, capture the move, and then move on to the next trade. So moving on to the next trade, this day was pretty wild. I actually took 2 trades this day, and they were on new markets that I'm testing out. And so it was a lot of new things that that are really good for understanding how to trade and move into different markets. And so the first trade we're looking at was on the euro dollar on the 9th. It's been 8 days since I last took a trade. And so that's how this strategy kind of works, is you have to be really patient. When you're patient, you can see it pays off really well, right? The first thing I do every day, come into the charts, look at the 15-minute. We're looking at the 15-minute chart of the euro dollar right here. And so just to show you that more is what I was looking at for that day, just drawing my levels. The market had kind of made a pretty good zone down here based on these kind of double bottoms and swings. So that's definitely a support zone to look at for. But currently the market was, market for me opens up at 6:30, which is pretty much right here. The market had clear movement the previous day and overnight, I think creating a solid resistance zone up here. And so then I would just jump into a 5-minute chart and then see how the market kind of came up to this level and jump in based on, a couple of things I saw. And so to walk you through exactly how I entered in on that trade, we were at that resistance zone and you can see it made a really big breakout of that level. And so what I call this is it's an exhaustive move or a failed breakout, as the market essentially made an attempt to break out of this level. You have all these people that like to buy breakouts of trades. If we just look at the actual 5-minute chart again, is what they're looking for. Breakout traders are trying to buy this breakout of this resistance zone right here. And so that's what they're trying to do. But sometimes is the market can do that. It'll break out, but then reverse and fail on them. How I do that is I use that as a confirmation that, okay, the market is likely or even more likely to reverse at this resistance level, and I can catch a big downwards move based on that. And so I actually got in this trade slightly before this trend had broken, and that's okay sometimes because I had a really strong catalyst here. And then as well is, if you look at this, there's a really strong bearish reversal candlestick right here. And so I thought that was a really solid confirmation to jump in on a trade and bet that the market was going to reverse here. And you can see that it did start to actually break that downwards trend. As well, it created that lower high that we're looking for. Again, it's a funky head and shoulders, but it still makes that lower high that we're looking for. And so how I actually enter my trades and figure out how much risk to take and where to put my stop is I actually have a tool that I take and put on. So if I'm going to enter right here, and I'm going to put my stop right here above that candlestick, I take this drawing tool that I've made and I have a fixed set of risk that it tells me that I need to trade 5 contracts to hit a fixed amount of risk. And so for me, that's $600. And so if it shows that if I trade here based on my stop, I will lose $625 if it goes against me. And if I go, here's 1x, 2x, 3x, you'll see I'll make, about $1,900 on 3x. And so that's kind of a really helpful, useful tool that I use to know exactly how to trade and enter each trade, because my stop loss is always a different amount because it's based on this candlestick. And so if this candlestick is larger or smaller, I will have to trade a different number of contracts. And you see, if I move this, if the candlestick is smaller, to hit that same risk amount of 650, you have to trade more contracts. And so this is something I found extremely useful for my trades that I've made. And I pretty much use it in every trade, even though you don't see it in these recordings all the time. Because when it comes to trading, it's extremely important to keep your risk the same amount across every trade, because you don't want to have a loss be way larger and take out a ton of wins. And so as that trade played out, I actually was also watching the NASDAQ futures. I watch multiple markets because it allows me to find more opportunities. And so how I found that is, again, just looking at the 15-minute chart of the NASDAQ futures. There's a pretty clear resistance level up here. And then also there was a pretty good little support level right here. Looking at a 5-minute chart, I think it makes it pretty clear as the market was clearly bouncing off this level. There's definitely supply down here. There's a good chance it's going to reverse. And so that's what I was watching as the market kind of went up and then sold off into this area around a 7 o'clock-ish time. And so I was looking for a potential reversal higher, which you can see happened. Now, one thing about this one that is kind of different is the market was really choppy at the time. And so I had seen spots where I kind of thought to get in. And so sometimes this will happen with this strategy and with any strategy is you'll see almost false signals to get in. So it's really important to figure out how to not get essentially tricked by the market to get in based on these. And so one thing that the market had done is the market opened again at 6:30 my time. And so what I saw over here was the market had made a massive rip up into our actually resistance level, but it never made a trade setup. And then it had a massive rip down here. And when the market does this, usually it can be kind of a signal that, okay, there's a lot of momentum there. We actually might break this support level down here. And so what I took from that is I need to let the market kind of lose some steam, see what's going on. You know, there's this other trade setting up that I'll jump in on in the euro dollar. And so I came back to this and saw that, well, the market had kind of sat here for, you know, about 40 minutes. And so what I saw with this is jumping in is it had a clear break of this downtrend and it had started to lose that momentum. And you can see that we made basically a higher low right here. What my concern with getting into this trade was, well, the market's already kind of, it's looking really sloppy. And I think there's a lot of downwards momentum. There was a really big bearish candle right here and right here. And then we started to actually see some strength. And so right here, it kind of made a new high. This kind of break move here, I think shows some strength. And so my thinking was, okay, this right here, these 3 red candlesticks could be its final attempt to go lower. Because of that, that's kind of the final confirmation that I like to see when this essentially fails. And it had this really strong green candlestick here showing a massive push higher of essentially it failing to continue the trend lower. And so because of that, the idea is, well, if it fails to go lower, it has a higher chance that it's going to reverse and go higher because, you know, you're trapping essentially people are betting that the market's going to go down here. And if it doesn't, well, they have to get out of their trade, which is going to push the market higher. I was still a little nervous with the market being kind of whipsaw here. Sometimes the market will get into modes like this where it just kind of gets into a sideways sloppy trend here. I kind of wanted a little bit more confirmation. And so if I kind of zoom back in the trade so we can see these candlesticks, is I jumped in right at this green candlestick right here because my thought is you can see there's essentially like a little wedge right here. And so my idea was, well, okay, it failed this attempt to go down right here. And there's a little attempt to keep going lower here too. This big bearish candlestick, it's failing that again. And so I think that after this big green candlestick right here, that's a really solid confirmation. Right when I get in, you can see that this red candlestick just starts puking lower. And that's when, you know, you're thinking, I'm an idiot. I should have waited for, you know, I should have done something else. This was a bad trade. You know, every time I get into a trade, I'm nervous. There's always that nervousness that you're going to be wrong or that you're reading something wrong. You know, the market has infinite possibilities. And so right now I'm thinking, oh, you know, I'm watching these 2 candlesticks kind of it's not working out right away. And I'm thinking, well, I should have bought up here on the actual breakout because I wouldn't even be in this trade right now. And then zooming forwards a little bit is it eventually does break out in my favor. And, you know, using that same tool, I have my entry here with my stop loss right here. And then the idea is that I jumped in on a trade long. And now this trade is actually on a 1-minute chart. And so I really have started to expand my trades onto multiple charts and multiple time frames. And so that allows you to find more trades because when it comes to trading, the way to be profitable is find something that really, really works for you, that you can be very consistent with to increase your win rate as much as possible. But finding some of those it doesn't show up very often. You know, I only took 1 trade this month on some of these markets. And so having multiple markets in play and multiple time frames allows you to see this stuff more often. Once we kind of had a little bit of a breakout here, I moved my stop up here, my stop loss, with the idea that I think that, again, keeping the idea that we are in this kind of tight range. If the market comes up to essentially right here and sells off, well, I just want to get out of the trade. It's not worth trying to deal with, you know, oh, is it going to come back and then keep going? You know, when the market's in a sideways pattern and it's just going to sit there. And so it's either going to break out here or it's more likely to just kind of sit here. And I don't want to deal with that. I want to get out, you know, take the scratch, essentially, take the risk off the table and move on to a better trade. So I've always found that the best trades kind of work out like this in your favor pretty quickly. You can see it started to break out higher and we start to have almost that exhaustive move in the flip side. You see right here, this big candlestick kind of triggers in my mind that, okay, we're getting up to this resistance zone up here. It's already where the market sold off once. We're up about 2-3 times my risk. And so I need to trail up my stop loss. And so right here, this candlestick kind of pulls back here, reverses. And so I elect to tighten up my trailing stop. There's kind of a tight trend line right here, again, to manage that trade more closely. Essentially, you can see it starts to lose that momentum. And so that's what I'm looking for, is I'm looking to get in when it kind of loses the momentum of the downtrend, catch the move up, and then get out when it starts to lose the momentum on the flip side. Just essentially you're catching the easy money. Yeah, sometimes you don't capture the whole swing, but again, the idea is you're capturing 80% of the swing. Trying to get in down here at the lows and then get out here at the exact highs is really a way to set yourself up for failure. And then going back to my other euro dollar trade that I had on at the same time, is I actually went for a walk with my dog, because you can see it's been going for about 2 hours. It's really doing nothing, and you just have to kind of distract yourself. It's hard to kind of just sit there and watch paint dry, basically. And so what I did was I just left my stop where I was. I actually put in a limit order at 3x with the idea that, hey, if for some reason while I'm gone, this thing just zips in my favor and knocks me out at 3x, I think that's a great spot. It's kind of down here where it's probably a support zone anyway. And at this point, I came back, went to break even because I could watch it, and took the profit target away. And then all of a sudden, a massive move happened, and it was because of some news. Some massive moves started going in my favor. And to manage this was I actually went to a 1-minute chart again, because it was moving so rapidly. It was happening so fast, I didn't get a chance to change my recording. But to show you on an actual chart, here is what I did. And so what I saw was the market was breaking down massively in my favor, and I hit about 3x. And so here was my drawing tool. 3x was about here. And so this trade actually got to about 4x. One thing I didn't explain earlier was my full size was 6 contracts, but I elected to trade 3 contracts because this was my first time taking a trade on the euro dollar on the 5-minute. And so I elected to trade half size. When you're doing something new, don't go full size. Take it easy, take it slow. Trading's always a process. And so once this broke out in my favor though, I elected to do that tight trailing stop of just previous candlestick high. And so I got knocked out right here on this candlestick. And again, you can see the market then made a quick reversal off that. And so I captured about 4 times my risk on that trade, because it was about $300 per trade. And that trade worked out really, really nice. Now this next trade was a little more unconventional, but it was still a really, really solid learning win for you to see. And so again, like I always do with my trades, first thing, coming into a 15-minute chart, we're looking at the S&P 500 futures now. And so November 15th is when I took my next trade. Again, it's just kind of waiting for things to align up. This day, the market had been in a really solid uptrend for a while, really not showing much in terms of levels. So that's why it kind of took a while for something to set up. And so here on the day when I, again, just briefly opened the charts, is at about 6:30. This is what I'm seeing. There's some kind of crazy big swing off of here. This is usually news before the market opens. And then there's a couple little bottoms right here that I'm looking for, maybe some kind of bounce to set up off of. You don't know what's going to happen until it happens. It's about just how the market sets up when it comes to those levels. And so looking at an actual chart then with those levels, as you can see right here, here was that at 5:30. A lot of the time some news pops 1 hour before the actual market open. Had a big spike, sell off, came to our level. This is pre-market, so I still drew off of these 2 bounces for the support zone down here. And then of course keeping track of this high up here as well. And so then I followed my general strategy. And so there was something slightly different about this one. But first thing going through our checklist is looking for that support zone. We had a support zone down here. Downtrend was broken. You can already kind of see that there's no really strong momentum down. Whenever you have a really strong downwards trend, you really need to make sure that the downwards momentum is broken, because a lot of times a massive downwards trend will come to a support zone, have a quick bounce, and then just sell off. And so what I like to do in those situations is kind of wait for it to do this a little and then capture a move higher. And so that's kind of what I looked for with this trade, is seeing that we were already kind of in sideways momentum, but we were having good swings. It wasn't super choppy, kind of like that last trade on the NASDAQ, you're having good movement here. And so I